And there's going to be a lift to the markets here over the next 2 months. So again, don't try to fight it, but be opportunistic about getting money put to work. So here's what you need to know before the bell this morning. S&P, like I said, broke out to new all-time highs yesterday. That sell signal we've been on for the last couple of weeks now very close to reversing. When we get this reversal, and which will probably happen today, actually, that will be the kickoff for the seasonally strong period, all in total. So we have the weeklies in place. Now you have the dailies in place. So again, this is going to potentially push markets higher here over the next couple of weeks. Now here's the important thing though that we've kind of been talking about as of late, and we've got to kind of keep a watch on this just a bit. This kind of trend line that we've got running from these August lows is going to intersect right around 6,000. My line's not perfect, but just trust me. We're coming up on the bottom side of that right now, and we're going to try to gravitate up towards 6,000 by the end of the year, maybe a little bit higher. But again, this is kind of this trend line we've been talking about. So it's going to act as resistance right now going into the market today. The market's going to rally a little bit today. We'll see how much it can hold on to that rally. We may get some profit taking today. So I wouldn't be surprised to see a little bit of a strong open, a little bit of a sell-off maybe later into the day. But markets are back. We know that oversold condition that we had very briefly was completely reversed yesterday. So again, we're back to overbought here real short term, but that can stay overbought for a while, particularly when there's a lot of momentum. Hedge fund managers are very underweight equities going into the end of the year. They've got to get grossed up on their books. So that kind of that systemic positioning for hedge funds, professional managers, etc., they de-risk going into that election, and now they're going to have to get re-risked by the end of the year, and their portfolios have to be allocated by year end. So again, there's going to be a lot of buying power between that and corporate buybacks, which is going to run about $6 billion a day here over the next 2 months. 21% of all buybacks, as I've told you before, get done over these 2 months. So again, there's going to be a lift to the markets here over the next 2 months. So again, don't try to fight it, but be opportunistic about getting money put to work. Speaking of small caps, they've, as I said, they finally broke out. Huge day yesterday for small caps. Finally broke out of this massive consolidation that they've been in here for a while. But you've really got to go back, unfortunately, quite a ways to really kind of get a picture of what's been going on for small caps. They finally broke out of the January 21 highs. So again, it's been a very long haul for small caps and a big underperformer. That's been a huge drag on portfolios if you're a small cap or have a lot of small cap in your portfolio. But you're now starting to get a little bit of exuberance. As we talked about yesterday just briefly, there's a very high correlation between the NFIB annual rate of change in the index for the NFIB and the annual rate of change in small cap stocks. The Trump election is going to be very beneficial, very positive for the NFIB index. I would expect a very big jump in that index in the next report over optimism about the outcome of the election. That's going to translate into higher prices for small and mid-cap stocks. So again, they're not grossly over, they are very grossly overbought after yesterday, but they're turning up on a buy signal here as well. So again, pullbacks in small caps, mid caps, you may want to look at adding a small bit of exposure. Now there's still a lot of risk to that sector. About $60 billion worth of corporate bonds are going to get downgraded to junk next year. Most of those bonds are in that sector. So know what you own, be careful what you own, but there's probably a need to add 3 to 5% of small mid caps to a portfolio here over the next year. We're going to be monitoring this kind of closely, but again, don't take a lot of risk, but you could see a little bit more of a beneficial play in this sector now. That's what you need to know before the bell this morning.